Good morning, ladies and gentlemen. Today we're going to be talking about theta mining. We're actually going to create a series of how you can do it, kind of teach you guys, follow me on the journey of how we're going to be setting up a theta mining account to basically mine close to $30 to $50 of theta every single day. That is going to be the goal for this account. So without further ado, let's dive into the market real quick. So as we can see here, the market is basically just kind of still pushing up higher on the day, breaking to new highs, and kind of just continuing its larger run impulse towards the end of the year. I did close two of those iron condor positions that I mentioned on the weekend because I was like, I'm kind of looking at it. I'm saying I could see a definitely squeeze here. I'm at 50% profit on both positions. So I'm like, okay, let's take the profit and run. I did open up a couple new positions today. So as you can see here, we got GDX, which is a gold ETF. Microsoft, I added on a position there, opened up Netflix, Tesla, and XLU. So all of these positions are iron condor positions. So for all those that don't know what an iron condor is basically you're shorting both ends of the spectrum. You're basically trying to collect theta, which is the whole point of this, is time decay. So time decay, or time is not your friend in options. What that means is for every day that the option contract is sold, or I'm shorting the option contract, then I'm collecting a certain amount of profit from it. And basically I'm going out further in time. We'll actually look at two trades I just set up prior to the close of the market. So let's dive into the S&P trades first. So I have a March 15, which is 80 days out. And why do you want to be so far out in time? You can't necessarily predict what's going to happen. Fully agree. And I do this on Tasty Trade, which is a pretty cool broker. I like them, just not a plug for them or anything, as just what I use. If you guys want to check them out, the link down in the description below. They do offer a certain amount of cash bonus per deposit when you open an account, so make sure you take a look at that. Could be some enticing. Their fee structure is pretty simple for options. It's $1 per contract, so if you're setting up an iron condor, it's $4, vertical spreads are $2, and to close them is basically 25 cents. So looking at $4.50 roughly for an iron condor, $2.50 for a spread. So pretty reasonable. I do find their executions and their tools to be pretty nice. So first of all, let's discuss the index trades. I didn't set it up on the IWM because, and we'll get into that just in a second, of why I didn't. I want to see more consolidation there, but I'll show you guys more of that. So looking at this, the orange here, which is what I refer to, is the expected move based on standard deviation pricing and all that, what option pricing is pricing it in at. And as you can see here, I set up a $500 and $510 $10 spread on the index, and I can actually show you this just so you can see for yourself what the cash value was. So right here, you're basically collateralizing $813 to collect $187 credit. So you're putting up $813 as your collateral, and then you're maximum going to collect $187 in profit. Now, the reason I don't like just putting vertical spreads on indexes necessarily, especially in this, is because you don't necessarily know. You have to pick the direction, and time is only in your favor then. Versus if I don't really pick a direction, kind of play both sides, I actually have the ability to manipulate the trade and kind of give myself some more cushion. So the first thing I look at is what are my short and long legs. Legs are referred to basically the two contracts on the one side of the trade. We'll look at the other side of the trade in just a moment. So right here, what I'm looking for is high open interest with high volume. So 1,000 contracts of volume today in these two areas with 15 and 27,000 open interest. It's a nice area to set up, kind of that area where the market could go to, but it's outside the expected range. So based on this, I like to play maybe like one or two strikes right next to that expected range if I'm going further out. Remember, iron condors are not hold to expiry. We usually close them at the 21-day mark. A TST trade thing that I do agree with their philosophy on. And the reason that is because you can get gamma. Basically, gamma is just a very large movement in the price of the stock, which the trade basically can blow up on you. So you held it for 60 days and you want to hold it for another 20. You've already collected a lot of theta, and that's not really what the instruments are necessarily about. You basically want slow, consistent growth, and longer term trades like this are pretty easy to set up. So as we can see here, shorting the 500 strike March contract for the S&P, and 510 longing. So that is your collateralized 815 versus 185. So again, open interest high, volume high, checks all the boxes. We just have to remember $10 with 21 and 12 deltas. So now we're looking at the short side. So as you can see here, 450 means 440, $10 spread. So you want to equalize the spread on each side. Even though the amount of strikes in between is different, we're looking at the monetary value. 20 and 14. So we're getting closer there. And anytime you set up these like longer term spreads, it's going to be a little hard to get the delta basically smack damp to zero. It's as time progresses, that delta will change, and you're not really looking, you're looking between 0 and 4 is kind of the sweet spot of what you want to set it up for. You're really focusing on the theta. So as you can see here, before we actually had this, let me get rid of these legs. So you can see is we have $186 in credit and $814 collateral. So the moment I add this, we can see that we are increasing our credit by $100, and we are actually decreasing our collateral that we have to put up by that same amount. So we really haven't changed the dynamic of the trade. We are looking at 50% probability to profit, 57%. That's just because you're close to where the movement's going to be, and the legs, it's a 40 basically delta combined, 50%, 77 chance to profit, 57. So not terrible, especially for a very long out there trade, but definitely something that we can set up. The open interest 100K and 48K with high volume on both. So easy money there to set up. That's something that the market's really not going to want to necessarily pay out that 450. So a lot of people are selling and buying it, trying to think short the market. I'm looking at it, I'm like, okay, well, this is going to be interesting here just to see how this all works out. And again, we're not holding to expiration. We're going to be holding, we want that $2.47 in theta every single day. Combine this with 2 or 3 trades, and there you go. You have $10 easily. And this is for $716, $3 a day. So if you just think about, if you had $1,000 portfolio, then we can basically see that if we just bust out the calculator real quick, if you're collecting $3 every day for 5 days, that's 15 times a month. That's nearly $60 on a $1,000 portfolio, right? So that's 6%. That's easy, nice money for you. Beats basically what you're getting on a monthly basis of 6%. That's pretty nice. And you can grow that to gain more consistency. So that's going to be pretty cool out there. And again, $284 in theta that we can collect, basically maximize. So 50% is going to be basically $140 in theta total. So not too bad. That's basically 15% on return on your collateral, roughly, just doing the math real quick in my head. But that's something I like. So now how can you identify what you can basically set up? How to identify XLU? How to identify Tesla? Well, Tasty Trade has this really cool thing that you can actually go to their Tasty watch list. You go to Tasty IVR, sort it by IV rank, not IV index. And you can see here the companies that are basically ranking in the top IV through the day. So at the top, we basically have GLD, which is one of the, or GDX, which is Vanguard Sectors ETF Trust. And that's basically a miners company. So the reason I did this was actually green on the day for the change, and they were actually sitting higher on the IV when I was looking at it. I usually do this on open just to basically get in, let theta kind of hit the day, let the IV spike, and let me see what I can do with it. And this is where I selected GDX, XLU. I'm looking for stuff around that 30 to 40 or higher. So Tesla was up here along with Microsoft, but as we can see here, Microsoft actually came down lower. If I can find it here for a second. Yeah, there we go. There's Microsoft. So 32.7, 3.1 increase over the last 5 days. So that's a nice area of implied volatility, and I actually had a trade already on Microsoft that's ending this week, so I wanted to kind of roll something into just to see what we had, and Microsoft basically went sideways, so it's pretty much a nice theta trade. I'm expecting a breakout on Microsoft, but then again, I am setting up an iron condor. If we take a look at it real quick for January 19th, shorter iron condor, I went a little more, and this is going against what I said about don't put trades less than 20 days, and I'm 24 here. I'm basically looking, I want to play around with where I can space my risk out, and I'll be watching this implied move where we're expecting to see. So 16.11 and basically 15.11. So I'm set up for a 15 probability trade of going against me or 85 going for me. So and that's where you got to watch your risk exposure to see how much you want to put out into the market. So as you can see here, I'm further away on those strikes from the implied move, and that's kind of where I want to set up. I want to basically catch both sides of that contraction on top of, as we can see here, nice IV index. So I have more things going for me. I have not the direction, I have the theta, and I have the contraction in the IV. So all things are very important to set up. And as always, Tasty provides this. I actually have my own personal watch list that I set up for stocks that I basically track. And as you can see, Microsoft's up there in the top. AbbVie, which is one of Fatal's favorites, is basically something you could set at 30, so we could take a look at what it's doing, maybe see what the option chains are. And again, you want that high open interest, you want that high volume, you don't want to necessarily force a trade. That's why some companies here that I'm actually not even considering, just because their spreads on their bids are too big and their open interest is lacking. I basically want high liquid assets to basically trade into, because that way I want to get out if I have to in a jiffy. So recapping, guys, as we can see here on the day, 43 P&L, not too bad, especially because I closed 2 positions. We got 37 theta. That'll decrease by, let's see if we pop open the Microsoft vertical, 15. So I got to find $15 more of theta somewhere in the market. So I'll be looking out for those opportunities as they come around, throw some iron condors on different sectors. Every single day you can basically find a trade. As we saw here, GDX, XLU, those were all trades I wasn't necessarily looking for and basically found on the day. So thank you all so much for watching. Hopefully this was helpful for you guys and you learned something from it. If you did, throw it down in the comment section of how I can improve this video. I really want this series to basically be something for you guys out there so you can watch, kind of learn, and maybe even start your own theta portfolio, trying to mine that theta out there in the market. Thank you so much for watching, and I hope you guys have a wonderful day.